Hey guys, in this video, I'm finally going to clear the confusion in regards to XDC, the R3 Corda, and the XRP token. So what is R3 using? This is a very big deal, guys, because there's a lot of confusion in regards to XDC and XRP in relation to the R3 Corda. In one of my videos, actually in my series, I showed documented proof that the R3 Corda uses the Corda Settler app. So R3 Corda uses the R3 Corda Settler to settle transactions, and the R3 Corda Settler uses XRP. So I showed documented proof of this. And so from there's a lot of confusion. Some people came out and said, hey, you know what, it's using XDC, XRP's got nothing to do with it. And then some people obviously saw the proof and they were open and said, oh, you know what, the proof is proof, right? If it's using the R3 Corda Settler, it's using XRP, then what is XDC's role? What's going on with XDC? And so I want to clear up the confusion. I want to say immediately, first of all, that XDC and XRP are both massive projects. So I'm a big believer in XDC. I'm a big believer in XRP. Obviously, if you've watched my videos, XDC, in my opinion, is not going anywhere. It is massive, but there is some confusion in regards to XDC settlement, because yes, XDC does do settlement transactions, but it's a bit different. And I'm going to clarify this for both communities today, once and for all. And so, my friend, this is going to be a very important video to watch if you're trying to wrap your head around it, trying to figure out what the heck is going on. And because we know that XDC is connected to R3, and we also have proof that R3 Corda Settler uses XRP for settlement. So what's going on here? You're going to have all the answers after watching my video, my friend. So just to go back a bit to give you an overview, in my R3 XRP mini-series that I did, it was 3 videos, I showed how Gilbert Verdian of Quant Overledger, when he was talking about the regulated liability network, he said we also partnered with R3, who is bringing in the shared ledger where all of the tokenized assets will reside. And in my videos, I show how the regulated liability network, the shared ledger, the unified ledger, the regulated settlement network, and the Finternet are technically all the same thing. They're actually the XRP ledger. Now, some people don't believe that. It's just because they haven't watched my videos. I do prove that 100,000,000% in my videos. There's no debate about it if you watch my video. But I was the first one to clarify that in the XRP and quant community to show that it's actually the central bankers are using 5 different words and when they're describing the XRP ledger, because the regulated liability network used to be called the regulated internet of value, but they changed the name because everybody knows that Ripple is the internet of value. And then there's another document showing that when the BIS talks about the regulated liability network, which technically used to be the regulated internet of value, this document says that the BIS, the central banks for all central banks, they call the regulated liability network the unified ledger. So anyways, gives you an idea, but I proved that all 5 different words are actually the XRP ledger. I show that in many of my videos. Gilbert Verdian said we also partnered with R3, who's bringing over the shared ledger. I show how R3 had a partnership with Ripple. They received 5 billion XRPs from Ripple. They had to bring utility and volume to the XRP ledger. There was a lawsuit. Seems that R3 wasn't holding their weight. And then it was settled, and R3 is still holding a bunch load of XRP. We don't know how much they're holding, but obviously they still need to bring utility and volume to the XRP ledger. And that is the shared ledger that Quant Overledger, Q&T token, when Gilbert Verdian says we partner with R3, who's bringing over the shared ledger, is referring to the XRP ledger. So in my videos, I show that, and that this is the XRP ledger. So again, this is where the confusion is coming from. People were like, what about XDC? What's going on? If R3 is using Corda Settler to settle transactions with XRP, and the shared ledger that R3 is using is the XRP ledger, then what is XDC's role? And I'm going to explain that to you right now. But in a nutshell, the XDC XinFin network is mostly used for tokenizing digital documents, tokenizing digital trade documents. So letters of credit, letters of finance, purchase orders, insurance on the product that's being shipped overseas. So tokenizing any documents that have to do with global trade. Now, XDC can do settlement But XDC is not specialized, is not meant for cross-border. So that's anytime you're going from one asset to another asset, you want to exchange a euro to a Canadian dollar or Canadian dollar to a yen, XDC doesn't have that liquidity and it doesn't have the platform. It's not built for cross-border. It's built for settlement, but it's not built for going from one asset to another. So for example, if someone is shipping something from China and let's say they're shipping something to Mexico and the buyer in Mexico is paying the person in China for the goods, the person in China might not want pesos. There's about 99% chance that they do not want pesos for the product that they're selling or shipping to Mexico. In that case, they want their own currency. They want to have the yen. So they would use XRP for settlement. So anytime you're doing global trade, you're shipping across countries, numerous countries, and the country that is receiving the payment for the goods, they don't want your currency. They don't want the yen or the euro or the Canadian dollar. They want their own currency, probably 80% of the time or 95% of the time. They just want their own currency. So you have to have a bridge asset and you have to have the liquidity and you have to have the settlement network and you have to have the banking network and you have to have all those things in place. And XDC doesn't have that. XRP has RippleNet. It has the banking network. It has the liquidity on the XRP Ledger. It has the decentralized exchange. It has all the components needed to act as a bridge asset. So I'm going to go through this. I'm going to show you exactly what XDC is used for and why it cannot act as a bridge currency. So you're going to understand the difference between the two. But yes, XDC does settlement. It does definitely transaction settlement, but it's not geared for cross-border payment. It's not designed for cross-border and it's not designed for cross-currency to go from one asset to another. It's not technically a bridge currency. So they're all working together. They're all complementary. R3 Corda and XDC, the XinFin network, and the XRP Ledger are all working together, but they have their different functionalities or their different focuses and their different strengths. So here we're going to see here, I asked R3 to explain it because they're going to be able to explain it better than me. So please tell me the relationship between R3 Corda and XinFin network. So the answer is R3 Corda and XinFin XDC network are linked through a bridge that enables interoperability, allowing XDC tokens to be used as a settlement coin within the Corda ecosystem. This partnership, facilitated by Lab 577, connects Corda's private blockchain with XDC's public blockchain, enhancing trade finance and asset tokenization while maintaining privacy and regulatory compliance. But I asked it, but what do they mean when they say XDC is a public and private network? It says, yes, XDC network's hybrid nature refers to its ability to operate as both a public and private blockchain. It combines public blockchain transparency and accessibility with private blockchain features like permissioned access and privacy for sensitive transactions. The bridge with R3 Corda enhances this hybrid capability by enabling private, secure interactions within Corda's ecosystem while leveraging XDC's public network for settlement and interoperability. So I asked it, please tell me briefly the difference between R3 Corda and XinFin. R3 Corda is a private permission blockchain platform focused on enterprise use cases like trade finance, emphasizing privacy, scalability, and interoperability for regulated industries. It restricts data sharing to involved parties only. So key difference, Corda is fully private and enterprise focused, while XDC is hybrid, blending public and private features for broader accessibility and use. The bridge enables interoperability because there's a bridge between R3 Corda and XDC. Their bridge enables interoperability with XDC acting as a settlement layer for Corda's private ecosystem. So it can settle, but again, you're going to see later on how it's going to explain that XDC is not meant for cross-border. It can settle transactions, yes, but it's not meant for cross-border. It's not meant for going from one type of currency to another. It's not a bridge asset. That's why XDC network and R3 Corda get a lot of benefits from using the XRP Ledger for settlement for cross-border. Now bear with me, I'm going to show that in a minute. Settlement. So the XRP Ledger here. Native token XRP, a decentralized blockchain designed for fast, low-cost cross-border payments, primarily for financial institutions. Use case: acts as a bridge currency for international money transfers, reducing reliance on traditional systems like SWIFT and Nostro Vostro accounts. It supports real-time gross settlement and liquidity management. So right here, the key differences in payment settlement. Primary focus. So XDC payment settlement. So what are the key differences in payment settlement between XRP and XDC? This is what I ask all. Primary focus, trade finance. So XDC network, their primary focus is for trade finance, supply chain, and enterprise solutions with payment settlement as a component. And the target audience is enterprises, businesses, and institutions involved in global trade and supply chain. So XDC's focus is global trade and supply chain, again, because it's tokenizing all the documents that are involved in global trade. So again, letters of credit, contracts, purchase orders, everything involved in trade finance. So that way it allows everything to be verified instantly. They can take a loan against that contract. It's just because it's tokenized, it removes all the paperwork and the cumbersome, just the amount of work involved in trying to process all these documents. So when it's tokenized and on the blockchain, everything moves seamless because the blockchain verifies everything. There's no more human error. It doesn't take hours and hours to do everything. And so XDC just allows that seamless process of documents that are involved in global trade. So that's why all of the documents that are involved in global trade are being tokenized, and they're being mostly put on the XDC network. Oh, and before I forget, none of what I say is financial advice. I'm not a financial advisor. You have to do your own research and make your own decisions. Don't buy something because of something I said. And also, even more importantly, not more importantly, I'm just kidding, but please like and subscribe, guys. It really helps my channel. I don't know if I said that at the beginning. Maybe I did, but I thought I forgot. But anyways, if you could like and subscribe, it'd be much appreciated. And leave a comment at the end. Let me know what you think. It really helps the algorithm. So XRP here, in regards to payment settlement, it says XRP primary focus is cross-border payments and liquidity provision for financial institution. So it's liquidity provision, cross-border and liquidity provision. And target audience, banks, payment providers, and financial institutions focused on international transfers. And right here, so in regards to XDC, operational differences, XDC excels in digitizing and settling trade-related transactions such as invoices, contracts, and supply chain financing. It tokenizes assets and uses smart contracts to automate and secure trade processes. So that's what I was saying. It tokenizes all the documents related to trade, and it makes everything more automated, more secure, more fast. So faster. So right here, example, a company using XDC can tokenize a trade invoice, settle payments instantly, and ensure compliance with regulatory standards, all on a single platform. So here, XRP and payment settlement. So it gave us an example here, XDC. Now it's going to talk about XRP. Liquidity bridge. XRP is designed as a neutral asset for instant cross-border payments, enabling banks to settle transactions without pre-funding Nostro accounts. It acts as a bridge currency for converting fiat currencies. So if you go from the GBP to euro, or Canadian dollar to euro, or US to euro, or euro to yen, any currency, right? But what the paragraph here is not talking about is that it's not only for cross-currency. It's not only for cross-border going from one currency to another. XRP is that bridge asset for everything that's being tokenized. That's why it's called the Internet of Value. Everything is being tokenized. So if you have tokenized stocks, tokenized bonds, derivatives, a stock of any type of different stock, or real estate, or fine art, when you want to go from one tokenized asset, regardless of what type of asset it is, to another type of asset, you're going to need liquidity. You're going to need a bridge asset. So XRP serves for that as well. So it's not only a bridge currency for different fiat currencies, Canadian, US dollar, Mexican peso, yuan. It's not only for that. It is for any type of asset. Again, that's why it's called the Internet of Value. Ripple XRP is the Internet of Value because it allows any type of value to be exchanged for any other type of value. And that's why the documents that came from the Hyperledger Foundation, it mentions XRP, it shows how they were going to create the Internet of Value, but it specifically said that XRP was the global liquidity marketplace. You need to have liquidity. So conclusion, XDC is better suited for enterprises needing a blockchain for trade finance, supply chain, and tokenized asset settlements with robust smart contracts capabilities and lower transaction fees. So specially design a blockchain for trade finance and supply chain and tokenized asset settlements. So it can settle, but it needs to have that liquidity though. So it can settle certain transactions, but when it comes to being cross-border or cross-currency, XRP is the main one that's being used. So for example here, XRP excels in providing liquidity and enabling fast, cost-effective cross-border payments. Cross-border is a wording that they use to say cross-currency, going from one type of currency to another. So technically, like I said, it's not only cross-border, it's not only cross-currency, it's cross-asset. So any type of tokenized asset to any other type of tokenized assets. That's what XRP is. It's the Internet of Value. It involves the Interledger protocol with the XRP Ledger built on top of it. And the XRP Ledger has a built-in order book. It has a decentralized exchange on the XRP Ledger, and it also now has the automated market makers. And plus it has RippleNet, it has a network of banks, so it has that liquidity. There's enough volume to handle the transactions and provide liquidity for almost any type of asset. It's going to get even more liquid. XRP is going to get even more liquid. I'll read that again. XRP excels in providing liquidity and enabling fast, cost-effective cross-border payments for financial institutions with a focus on real-time settlement and banking integration. Synergy. This is very important here. So both can coexist in the financial ecosystem with XDC handling trade finance backbones and XRP facilitating instant payment settlements. Now, this is very important here. So I asked Grok AI, I said, can XDC do what is listed below? Liquidity bridge for X. Can it act as a liquidity bridge like XRP can? Because the Grok 3 had given me a description. It said XRP is designed as a neutral asset, so on and so forth for cross-border. So I asked Grok 3, I said, can XDC do this? Can it provide global liquidity? Can it be a liquidity bridge asset? So on. So this is what Grok says. So XRP's capability. XRP acts as a neutral bridge currency for instant cross-border payments, allowing banks to convert fiat, like I said earlier, without pre-funding notional Vostron. This reduces liquidity costs and enables near-instant settlement. 3 to 5 seconds via the XRP Ledger. XDC's capability, bridge currency potential. So this is what it's going to say. It's going to talk about XDC. Can it be a bridge currency or not? XDC can theoretically serve as a bridge currency for fiat conversion as its native token XDC is tradable on exchanges and can facilitate value transfer. However, XDC's primary focus is on trade finance and tokenized asset, not specifically on acting as a liquidity bridge for fiat to fiat conversion. This is extremely important. This is the key right here, my friends. This is the kicker right here. Let me read that again. This is why XDC is not the primary settlement asset for R3 Corda. Even XDC XinFin will use the XRP Ledger for cross-currency, cross-border payments, because I'm gonna dissect this for you real quick here again, and listen carefully what it says here. XDC can theoretically serve as a bridge currency for fiat currencies because its native token XDC is tradable on exchanges and can facilitate value transfer. So what it's saying here is because you can trade XDC on the exchange, crypto exchanges, technically it can serve as it could settle transactions, because you could go and trade your XDC for the US dollar and then try to trade the US dollar for another tokenized let's say the yen or the peso or whatever. So because XDC is found on the exchanges, you could technically trade XDC for another currency and then trade it again for another currency. But it's not, it's because of that reason it technically can, but that's not the same thing at all. This is not the same as the XRP Ledger, where you just press a button and boom, you tell the system what currency you want, and automatically your currency gets converted into the other currency that you want instantly without you even doing anything. With XRP, you don't have to go and send the token to an exchange it for another token, then try to find a pair, and then exchange that token again for the other token if there's enough liquidity, and then maybe send it to another exchange and somehow trade that token for another token that you wanted. That's not the same. This is what the AI is telling you here. If you want to try to do cross currency with XDC, you got to go through all these hops and try to find the pairs on the exchanges, and you got to exchange it for that currency and then try it. It's not the same. RippleNet, the XRP Ledger, it's instant. You just choose the currency you want and it's instant settlement. It goes from one currency to another. So that's the big difference that people need to understand. That's the big difference between XDC and XRP, the XRP Ledger. Listen to this carefully. XDC network supports fast cross-border payments with low fees and transaction speeds of 2,000 per second, with settlement times of 4 seconds. It is designed for enterprise use, including payments between businesses and institutions, but it lacks the same level of banking-specific liquidity infrastructure as XDC. But it could theoretically do some of the things that XRP does, but it lacks the level of banking infrastructure and liquidity, so it's not even close, guys. So Nostro-Vostro elimination. While XDC can reduce reliance on pre-funded accounts by enabling direct settlements via its blockchain, it does not have a dedicated liquidity solution like Ripple's on-demand liquidity, ODL, which uses XRP to source liquidity from crypto markets. XDC's ecosystem prioritizes trade finance applications, such as invoice financing, supply chain payments, over banking liquidity management. Let me read that again. XDC's ecosystem prioritizes trade finance applications, such as invoice financing, supply chain payments, contracts, tokenizing, trade contracts, everything, instead of focusing on banking liquidity management. It does not specialize in banking liquidity management. Verdict. This is the verdict. XDC can facilitate cross-border payments and potentially acts as a bridge currency for fiat conversion, but it's not optimized for this role. Its infrastructure is more geared towards enterprise trade settlements than replacing Nostro-Vostro accounts for banks. RippleNet, so banking focus, XRP's capability. RippleNet, powered by XRP, is tailored for financial institutions, offering real-time gross settlement and reducing transaction costs by 60% compared to traditional systems like SWIFT. RippleNet integrates with banks' systems, leveraging XRP for efficient cross-border payments. So it talks about XDC's capability, talks about the fact that it's ISO compliant, but it says this compliance supports interoperability with banks, but XDC's primary audience is enterprises involved in trade and supply chain, not banks. And then it talks about real-time settlement with XDC. It says it lacks the extensive banking partnerships that Ripple has built with over 300 plus financial institutions for XRP. So it's saying here that Ripple has over 300 financial institutions with RippleNet, but this is incorrect. The AI here is going by what Ripple's website is still saying. And Ripple is not being honest. Ripple's not honest with the XRP community. I'm sorry, guys. So here, Ripple is still saying they have 300 banks connected to RippleNet. But in reality, if you guys were here in 2018, I don't know if any of you remember this, but in 2018, Ripple had 200 banks connected to RippleNet. This was on their website. And Brad Garlinghouse, CEO of Ripple, was often saying, oh, we have 300 banks connected and we are connecting 6 banks per week. So first he said we're connecting 5 banks per week to RippleNet all the time. Then he said we're connecting 6 banks per week consistently. We're connecting 6 banks per week. We already have 200 and we're connecting 6 banks per week. This was in 2018. They were connecting 6 banks per week every week. They admitted that. Then they stopped talking about it completely. So 6 banks per week times 52 weeks per year. That's 312 banks per year times 7 years, because this was 7 years ago. So 7 years times, what did I say? Sorry, I said 6. Yeah, so 7 years times 312. That is literally, oh my goodness, sorry. I was going to do math. So it's 2,192, or whatever, right? It's 3,100. Sorry, it's over 2,100 banks connected on RippleNet on top of the 200 that they already had connected. So right now, Ripple already has individually connected at least 2,100 banks at minimum. This is without connecting Swift, which we know they're integrating Swift. Swift was always going to connect with Ripple. It's just the idea that Swift was a competitor is all BS. They knew that Swift was going to connect to Ripple. So even without connecting Swift, which is 10,000 banks there alone, and all the other payment providers and companies that are integrating with Ripple, Ripple would have, without all of that, would still have over 2,100 banks connected today. So I'm just saying, like, here the AI is incorrect because the AI is going based on what is still publicly available on Ripple's website. But Ripple's not being honest about how many banks they have connected to RippleNet. They have way more than 300, like I said. Right here. The verdict: XDC can support real-time settlements and integrate with banking systems via ISO 20022, but it lacks the banking-specific infrastructure, partnerships, and focus of RippleNet. It's better suited for enterprise-to-enterprise settlements than bank-to-bank transfers. So, limitations. XDC has lower market liquidity. 741 million versus 34 billion XRP. And actually, it's way more than that now. And this is as of 2023. XRP has way more now. And fewer trading pairs on exchanges. It doesn't have the trading pairs. It doesn't have what Ripple has, be a decentralized exchange within the XRP Ledger and everything else I was talking about, making fiat to XDC to fiat conversions less efficient. XRP's higher liquidity and exchange presence make it a more practical bridge currency. Infrastructure. XDC, I should have made that bigger, sorry. Infrastructure. XDC lacks a dedicated banking-focused platform like RippleNet or ODL, on-demand liquidity, to streamline fiat conversions for banks. Let me repeat that. XDC it doesn't have the dedicated banking-focused platform like RippleNet or ODL, which is on-demand liquidity, to streamline fiat conversions for banks. While XDC's hybrid blockchain supports enterprise payments, it doesn't have the same level of integration with banking liquidity pools. It doesn't have the liquidity. Now, listen to this very carefully here. Swift bypass. XDC can bypass Swift for cross-border settlements, offering speed and cost advantages, but its ecosystem is designed for trade finance. Example, settling invoices between businesses. So XDC specializes in settling like invoices and contracts and stuff like that for businesses rather than bank-to-bank currency transfers. So again, XDC is not made for cross-currency, for cross-border, for international transfers, for global liquidity, to go from any type of asset to any other type of asset. So this is why XRP is extremely complementary to the XinFin network, to XDC, and to R3 Corda as well. So right here, an example of a workflow. A business using XDC could settle a USD to JPY payment for a trade invoice, converting USD to XDC via an exchange, and then transferring the XDC to the recipient's wallet and converting the XDC to the JPY. This would be fast and cheap, but requires manual exchange integration and may face liquidity constraints. You need to have a lot of liquidity to do that, and then you'd have to do it manually with the exchanges again, and that's the problem. With XRP, it's just instant settlement. You don't have to go from one exchange to the other, try to find liquidity and all that stuff, because the XRP Ledger is technically a global liquidity hub with unlimited pairs, the way that it's integrated into everything. So you always have that liquidity. So listen to this very carefully. Verdict: XDC can technically handle a USD to JPY transfer with speed and low fees, but it's less efficient than XRP due to lower liquidity, fewer banking integrations, and a lack of banking-specific liquidity tools. So it's less efficient. It's extremely less efficient, like really not efficient. Less efficient than XRP due to lower liquidity, fewer banking integrations, and a lack of banking-specific liquidity tools. So here, additional considerations. Trade finance versus payments. XDC's strength lies in digitizing trade finance processes, tokenizing invoices, automated letters of credit, so on and so forth, using smart contracts, which XRP's ledger does not prioritize. For pure payment settlement, XRP is more specialized. Synergy potential. As noted in the expos, XDC and XRP could complement each other, with XDC handling trade finance backends. So again, contract settlements, tokenizing different trade documents, trade finance documents, and XRP managing instant payment liquidity for banks. Can XDC do what XRP does? Partially yes, but no, not fully, not really. So XDC can facilitate low-cost cross-border payments, settle transactions in seconds, and bypass SWIFT, making it capable of handling scenarios like the USD to the JPY. So that would be a simple conversion, right? That's a simple one. But what if you want to go from USD to some pair, that some different fiat currency that really doesn't have a lot of liquidity, that XDC is not even paired with on the exchanges at all? XDC won't be able to do it. But anyways, it's saying that technically it can do it. It's ISO 20022 compliant and supports enterprise grade settlement. But no, not fully. XDC is not optimized as a liquidity bridge for fiat conversions. It lacks banking specific infrastructure like RippleNet and ODL, and has limited adoption among major financial institutions. Its focus on trade finance and enterprise solutions make it less suited for XRP's banking-centric use cases. So here, I asked AI, why XRP is needed for R3 Corda. R3's Corda is a permission distributed ledger technology platform designed for regulated industries like finance, focusing on privacy, security, and interoperability. XRP, the native token of the RippleNet payment protocol, is primarily used for fast, low-cost border payments. Here's why XRP is relevant to Corda. Cross-border settlement efficiency. XRP is designed for rapid, low-cost global payments, enabling real-time liquidity without pre-funded Nostro accounts. Corda, used by financial institutions for various applications like trade finance, can leverage XRP for cross-border settlement. In 2018, R3 announced the Corda Settler, a mechanism allowing payments on Corda to be settled using XRP, highlighting its role as a bridge currency for instant international transactions. So when the Ripple and R3 lawsuit was settled, 2 months after, or maybe a few weeks after, 2 months after, R3 released the R3 Corda Settler, which uses XRP for settlement. And this is what the lawsuit was all about, is that literally R3 had not released the Corda Settler yet, and it seems that they were not holding their weight, and they were not doing what they were supposed to do for these 5 billion XRPs that they had received from Ripple at 0.008 of a dollar, like 0.008, like less than a penny. R3 had received an option to buy XRP at less than a penny, 5 billion of them, and they were not holding their weight. Okay, so literally Ripple was giving them XRP for extremely cheap, right? Almost at zero, so cheap, and they were not holding their weight. So they started having these lawsuits in between, and then it was settled. Okay, so they kept working together. A lot of people say, oh, it was settled, doesn't mean no. Listen, they're still working together, my friend. And I proved that in my other videos. So R3 is still holding a whole bunch of XRP, and after the lawsuit was settled, and that's when a few months after they released the R3 Corda Settler that uses XRP for settlement. Interoperability with RippleNet. RippleNet, which uses XRP, connects banks and payment providers globally. Corda's interoperability with RippleNet allows institutions on Corda to settle transactions with RippleNet, participants using XRP, expanding the network's reach for cross-border payments where XDC may not have the same level of adoption or liquidity. So I had asked the Grok, so explain to me why R3 needs XRP. What is it used for? So now I'm asking the same question, but I'm saying, why is XRP needed for the XinFin network? So why does XDC use XRP? How would XDC benefit from using XRP? So complementary use cases. XDC is tailored for trade finance, again, smart contracts and tokenizing real-world assets, invoices, bonds, so on and so forth. XRP, however, excels in cross-border payments and liquidity provision. XinFin can integrate XRP via bridges like OneBridge, which is not the only way. That's not a good example, but anyways. And so XinFin can integrate XRP to enable faster, cheaper cross-border settlements for trade finance transactions, complementing XDC's focus on asset tokenization. XinFin's partnership with R3 allows XDC to bridge to Corda, but Ripple's established network and partnerships with Swift and other financial institutions make XRP a valuable asset for connecting XinFin's trade finance applications to RippleNet's payment infrastructure. This is particularly useful for institutions already using Ripple's solution. Summary: XRP is needed for R3 Corda and XinFin because it offers superior liquidity, global adoption, and specialized cross-border payments capabilities that complement XDC's trade finance and smart contract focus. XDC, while powerful for XinFin and Corda's enterprise-grade applications, may not suffice alone due to its smaller market presence, limited liquidity, and narrow focus on trade finance rather than broad payment networks. XDC is focused on trade finance, not on broad payment networks. By integrating XRP, both Corda and XinFin can enhance interoperability, connect to Ripple's ecosystem, and meet diverse institutional needs. This combination of XDC and XRP allows Corda and XinFin, which is XDC, to balance privacy, regulatory compliance, and global payment efficiencies, ensuring they can serve a wide range of financial use cases effectively. So last thing here, what is liquidity and why is it important? Liquidity in simple terms means how easily and quickly an asset, like a cryptocurrency such as XRP or XDC, can be bought or sold without causing a big change in its price. Think of it like water in a bucket. If the bucket is full, high liquidity, you can take out a cup of water without noticing much difference. But if the bucket is nearly empty, low liquidity, taking out even a small amount makes a big impact. In financial markets, high liquidity means there are a lot of buyers and sellers, so transactions happen smoothly, quickly, and at a stable price. Why is liquidity important? Fast transactions, stable prices, lower costs, global reach. So again, why is liquidity important? Because there's no other blockchain or DLT that has the liquidity that XRP has. And it doesn't have, again, the infrastructure, the interledger protocol with the XRP Ledger, with the decentralized exchange built on top of the XRP Ledger. Plus it has an order book and it has the automated market makers on top of it. Plus it has RippleNet for the network. And it's a very specialized niche focus. It's all about that bridge asset providing liquidity for the world. And unless you spent thousands and thousands of hours researching XRP, you're not going to understand why XRP is really made to be a bridge asset and how it's structured to be from the very beginning. This has been planned for over 20 or 30 years. I'm not kidding you. And I proved that in my other videos. XRP has been planned for over 20, 30 years. The rising phoenix that was pictured on The Economist magazine in 1988, and the article in that magazine again, 1988, was technically a depiction of the XRP. It was where the IMF was planning a new global reserve currency for trade finance, for global trade, and for global liquidity to fix the Triffin's dilemma. And so technically this has been planned since 1988. And a year after is when David Schwartz was awarded the Bitcoin patent. Technically, it's a patent that he was awarded while he was working for the most powerful three-letter agency in the world. If you Google search David Schwartz Bitcoin patent, you'll find a patent that he received in 1989, like I said, and it's a distributed computer system patent. It's technically the Bitcoin patent. So the Nakamoto story that the white paper came out in 2010 and Bitcoin was invented by Nakamoto and all this stuff, it's complete BS. So this is what the governments told the world, and so that we would accept the idea of digitization. The Nakamoto story is complete BS. It's the most powerful three-letter agencies in the world that have created Bitcoin. And this is a long story, and I proved that in my other videos. So let's read this again. Why is liquidity important? Fast transactions. High liquidity allows payments or trades to happen instantly because there are always people ready to buy or sell. For example, in cross-border payments, like sending money from one country to another, high liquidity ensures the process is quick and efficient. Second reason it's important, stable prices. When liquidity is high, prices don't jump or drop suddenly during trades. This is crucial for businesses or financial systems like R3 Corda or XinFin, which need predictable costs for international settlements. Third reason liquidity is very important. Lower costs. High liquidity reduces the cost of transactions because you don't need to pay extra to find a buyer or seller. This is especially important for low-cost global payments, where every penny counts. If you're buying something from a country where their currency is not worth much and you're paying them 20 USD, that seller that's receiving the, let's say they're in the Philippines and they're in a poor country and they're receiving $40 for something they provided you, they sold you a good and you're paying them 40 US dollars, they don't want to pay $15 fee on that $40. So this is why it's important to have that liquidity. So lower costs. High liquidity reduces the cost of transactions because you don't need to pay extra to find a buyer or seller. This is especially important for low-cost global payments where every penny counts. Sorry, I had read that already. Global reach. Assets with high liquidity, like XRP, are widely accepted and traded worldwide, making them more useful for connecting different financial systems or networks. Very interesting. Final conclusion here. In the paragraph you provided, XRP is described as having high liquidity with a market cap of 1 billion. It's way more than that right now, compared to XDC, almost 1 billion. This means XRP is more widely traded and easier to use for fast, low-cost international payments in systems like R3 Corda or XinFin. So it's saying that these fast, low-cost international payment in systems like R3 or XinFin, XDC, while great for trade finance, has low liquidity or lower liquidity, so it's harder to use for quick global payments. High liquidity makes XRP a better bridge to connect these platforms, so the Corda platform. So high liquidity makes XRP a better bridge to connect these platforms to the world, ensuring smooth, affordable, and reliable transactions. It's extremely important that these transactions are reliable. If they're not reliable, it's going to slow down global trade. It's going to be the same mess that we have right now. So guys, I'm going to stop the video for now. So I might do a part 2. Thank you so much for watching. Please like and subscribe. Please leave a comment. Let me know what you think. Like I said, I might do part 2. I'm not sure. I didn't go as far as I wanted. But thank you so much for your time. Thank you for checking out my video. And I'll see you in the next one. God bless.